Hello, I'm Bob Hanna with Retirement Wealth Strategies. My business partner and I, his name is Mark Hughes, have been working with people over 20 years to help you retire and have a successful, happy, worry-free retirement. That's all Mark and I do. We're not helping people plan for the college education payment or how to set up an IRA. We're dealing with people that are going from the accumulation phase, which you're probably in right now, many of you, where you're saving money for retirement, hopefully 401k, IRAs, 403bs, etc. This will be the money that you will use to turn on an income in retirement. That's all we do. Going from the accumulation phase, saving money, to the distribution phase, which is pulling money out of your account to supplement your retirement. Many of you, I'm sure, have investment professionals that you work with possibly. I don't know how often you see them, but the fact is they invest the money. We do too. But there's much more to it, because when you go from, okay, I want to invest the money and make money, but I want to take money out to supplement my retirement. That's what we specialize in, setting up an income for you for life, whereby you're not going to run out of money. Because people want to know, do I have enough money to retire? What kind of interest rate can I get? What kind of income can I get? Will I run out of money in retirement, etc.? Now, we think that there's 4 steps to an optimal retirement, successful, stress-free retirement. I think there's 4 simple steps. I want to talk about step number 3, and that's long-term care. What is that? Home care, adult daycare, last but not least, the nursing home, long-term care. Very expensive. Many of you have had examples in your family, like I have with my grandmother and my mother. It costs a lot of money. So step 3 is, one thing that we want to know is, this long-term care could wipe out your retirement savings. And you need to plan for that. And many people haven't. They talk about it, but they don't do anything. If you're 65 and above, there's about a 90% chance that one of you, husband or wife, is going to need long-term care sometime in your lifetime after 65. So we need to plan. There's a big impact that this long-term care could have on your retirement, because it could wipe things out, and it's not getting any cheaper. So most important, when you're talking about long-term care, you need to search for someone like Mark and myself, and we're not the only ones, don't get me wrong, but we specialize and have for many, many years talking to people about long-term care. We specialize in that area. We know the market. And so many investment professionals really don't know a lot about long-term care. You need someone, when you're trying to cover this risk, even if you don't do anything, to talk to somebody that knows what they're talking about. And Mark and I do with long-term care. I'm not a big fan of individual long-term care insurance. If you have it, it's great. We certainly have the capabilities of selling something like that to you. We can shop the market with any company out there. But the fact is, you're probably going to fall off your chairs when you look at the price. It is very expensive. But the big problems I have with individual long-term care insurance, that many of you have, and don't throw it out the window, keep paying that premium. But the problem is, long-term care insurance is guaranteed renewable, which means they can't take it away from you if you have diabetes or cancer or heart or whatever it might be. They can't take it away from you. But they can raise your premium anytime they want, not just for you, but for anybody that has that class of policy with that company. You can dial up the Ohio Department of Insurance look for long-term care, and it'll show you the companies that have recently filed for a rate increase. And they typically will get approved. If they don't get approved for the percentage increase they wanted, they'll go back again and try it again. But I'm sure some of you have gotten these premium increases, and you get to the point where, can you afford it? What do we do? And there's different things that you can do, but you're going to have to alter your coverage basically to do that. There are alternatives on the market to the traditional long-term care. Because see, with the long-term care, as I said before, they can raise your rates anytime they want. And also, too, you pay a premium with your long-term care insurance for 15 years or 20 years, and you die, your family, your spouse, they're not getting any money back. I want to show you, now it doesn't work for everyone, but it's worth talking about. I want to show you alternatives to traditional long-term care insurance, whereby if you qualify and you pay the premium, the fact is your premiums will never go up, and you've got a cash value. That is, when you die, you've never used the long-term care insurance, there's money that goes to the family, there's money that goes to the spouse. Premium doesn't change, you just have to pay the premium. But there's alternatives. So what we want to do is show you some different things that you can do. But the key to it is, I don't want any of our clients' kids coming back to us and saying, hey, Mark and Bob, you didn't discuss with our parents this long-term care expense and what effect that might have on their retirement portfolio, because it could be substantial. So don't forget about this risk. Don't just talk about it, and don't just think, hey, there's just this policy I got to buy from XYZ company that's going to cost me a lot of money. And if I don't need it, I don't get any money back, and they can raise my premiums. Yes, that's true. And that's probably the best route to go for some people, but there's other ways that we can go about it. Don't just think there's only one way to go. We can look at those alternatives to this. One is, okay, you might own life insurance. Well, does that life insurance policy have a chronic illness rider? Let's take a look, because if it does, then what you can do is you can use some of the death benefit while you're still alive to pay for long-term care expenses. It's called chronic illness rider. That's one of the first things that we check out. Bring in your life insurance policies. Let's take a look at it. It's worth it, okay? But the key to it is cover this risk. It's not going to go away. I mean, my grandmother up in New York State, my mom up in Hudson, Ohio, and up near Cleveland, very, very expensive stuff. It's important to have, but you don't want to be wiped out because of long-term care. So we need to look at different solutions. I offer a 30-minute free phone call to analyze your situation, to talk about questions you might have concerning this long-term care. Take it very seriously. Been doing it for a long time, so I know a lot about it, but the fact is, not everybody's going to cover this risk, but have you talked about different ways to do it? And this is what I want to help you do. So if you go to www.rws-llc.com, you can set up a time where we can talk, or we can have lunch, or whatever you want to do. There's no cost, there's no obligation, it's not a sales pitch, it's just, hey, what's one of the biggest risks that you might face that you haven't covered, and that could be this long-term care. Home care, very, very popular. Adult daycare, very popular. Last but not least, institutional care, which is the nursing home. That would be last but not least. But the fact is, how are you going to cover the cost? Where's the money going to come from? Let's talk about it. Go on the website. Let's set up a time. It's not a sales pitch. It's just, hey, here's where you are now. Have you thought about long-term care? Do you have long-term care? Do you know anything about it? What are some of the alternatives, and how does that work using your existing assets? So I appreciate you listening. Let's get together and talk about long-term care and the lasting effects that that could have on your portfolio. Thank you.